Hey everyone, welcome back to the channel. Today I'm going over Alphabet's Q2 2025 earnings. It was a really strong quarter. Google's business is growing across the board, especially in cloud and AI, and I still think the stock is undervalued. I'll break it all down in simple terms and share why I'm still buying more shares whenever it goes down. Let's get into it. Alphabet made $96.4 billion in revenue this quarter. That's a 14% increase compared to last year. Pretty solid for a company this big. What's cool is that almost every part of the business grew. Search, YouTube, subscriptions, hardware, Google Cloud, all of them had double-digit growth. That just shows how well-rounded the company is. Google Services made $82.5 billion, up 12%. Search is still going strong, and Google is starting to roll out more AI features. One of those is AI Overviews, which basically gives you quick summaries in search results. It now has over 2 billion monthly users, and that's up from 1.5 billion just last quarter. Crazy fast growth. YouTube is also doing great, with more money coming in from ads and subscriptions. That's another solid stream of income for them. But the big highlight? Google Cloud. Revenue here grew 32%. That's huge. They made $13.6 billion this quarter just from cloud services. And their cloud business now brings in over $50 billion a year. That puts them right up there with Amazon and Microsoft. Plus, their AI tools are a big part of that growth. Google's going all in on AI. Their Gemini app, which is like Google's version of ChatGPT, now has 450 million monthly users. They're also spending big to hire top AI talent. They just bought an AI startup called Windsurf for $2.4 billion, bringing in the CEO and a bunch of top researchers. Clearly, they want to stay ahead of the AI race. They also updated us on their experimental projects called Other Bets. This includes things like Waymo and Verily. These projects made $373 million, but they're still losing money, about $1.25 billion this quarter. That's expected, though. These are long-term plays. Now, expenses were up this quarter, 20% higher, mostly because of a $1.4 billion legal settlement. That was from a data privacy case in Texas. Big number, but one-time stuff like this doesn't really worry me long-term. Even with that, profits still grew. Net income was up 19%, and earnings per share jumped 22% to 231 cents. That's great. It shows the business is not just growing, but also staying profitable. Now, here's why I'm still buying the stock. Even after all this growth, Google is trading at a PE of around 20. That's on the low end for this stock, especially for a company growing this fast and leading in AI. I think it should be trading at closer to 25. That's why, even though it's already my second biggest position, I'm planning to keep buying more shares whenever I get the chance. So, yeah, Google crushed it this quarter. Search is strong, YouTube is solid, cloud is booming, and they're making big moves in AI. Add in strong profits and a smart long-term strategy, and I really like where this company is headed. Let me know what you think. Are you buying Google after these earnings or waiting for a better price? If you found this helpful, give the video a like and subscribe if you want more honest investing content. Thanks for watching, and I'll see you in the next one.